Did you know that Tesla stock may soar if this happens? People in the financial industry are well aware that even a single event allows for a stock to soar or drop. Stay tuned and keep watching to find out what is about to happen that may make Tesla stock soar. Tesla stock, like other stocks in the market, has become harder to predict given all the changes in the world that consequently affects the economy. On the other hand, there are also predictable changes due to decisions made by people and/or the government. Today, you will find out what is expected to happen and why Tesla stock might soar because of this. In late July, Senator Joe Manchin of West Virginia reached an agreement with Senate Majority Leader Chuck Schumer worth hundreds of billions of dollars to lower prescription drug prices, raise taxes, combat climate change, and invest in renewable energy. The bill represents a slimmer version of a massive domestic spending plan dubbed Build Back Better, which was a central pillar of Joe Biden's first-term agenda. The legislation would raise money through a 15% corporate minimum tax, prescription drug pricing reform, enforcement through the Internal Revenue Service, and closing of what is called the carried interest loophole, which allows partners at private investment funds to have their income taxed as capital gains instead of regular income. It would allocate $369 billion for energy security and efforts to combat climate change, as well as $64 billion on extending subsidies for the Affordable Care Act. U.S. President Biden called it the action the American people have been waiting for. This addresses the problems of today, high healthcare cost and overall inflation, as well as investments in our energy security for the future. He said, if enacted, this legislation will be historic. He added, the bill, called the Inflation Reduction Act of 2022, is set to make a historic down payment on deficit reduction to fight inflation, invest in domestic energy production and manufacturing, and reduce carbon emissions by roughly 40% by 2030. If this pushes through, the total revenue raised is expected to be around $739 billion. This amount comes from 13% of corporate minimum tax worth $313 billion, a prescription drug pricing reform worth $288 billion, IRS tax enforcement worth $124 billion, and carried interest loophole worth $1 billion. All of that combined is $739 billion. Total investments are expected to be around $433 billion from energy security and climate change, and the Affordable Care Act extension is worth $369 billion and $64 billion, respectively. If the bill eventually passes, it could be a big catalyst for all EV manufacturers. At this point, there may be questions as to how the said bill may influence and affect the EV industry. What is the EV tax incentive, and how will this tax credit or incentive impact demand for EVs? In that regard, how will it impact Tesla, and what are the pros and cons of an EV tax incentive? The bill is over 500 pages, and there is a specific section for the EV tax credits. Take into account that some portions of the bill are bound to change as it passes along different offices. Based on the currently available information, there will be a $7,500 tax credit for new electric vehicles and a $4,000 tax credit for used EVs. Of course, there are factors and requirements to be considered. The income requirements for new electric vehicles, if you're a joint filer, is less than $300,000 and then $150,000 as a single filer. For used vehicles, the income requirements are basically $150,000 for joint filers and up to $75,000 for single filers. There are also corresponding price requirements for EVs. If the EV is an SUV, pickup, or van, it can be priced up to $80,000. Cars or EVs above that price do not qualify for these EV tax credits. For smaller vehicles, it is up to $55,000 in price. For used EVs, it is applicable only for EVs up to $25,000 in price, given that the used vehicles were sold by a dealer. This EV tax credit can only be used the first time the car is resold. There are several more aspects interesting for the EV sector. One of them is that a certain percentage of the battery components by value must be manufactured or assembled in the US before 2024. The volume of battery components that need to be manufactured or assembled in the US basically starts with 50% and will eventually go up to 100% to qualify for at least half of the tax credit. On the other hand, the other half of the tax credit is regarding battery minerals. A certain percentage of the battery minerals must come from a country the US has a free trade agreement with or must be recycled in North America. The target would be 40% in 2023, 50% in 2024, 60% in 2025, 70% by 2026, and so on. Moreover, there are certain restrictions imposed against any and all battery metals or components coming from entities of concern. That said, what will be the impact of this tax credit on EV demand if passed? First, this tax credit can be applied as a rebate from the dealer. Simply put, it can be applied as a down payment to the car price. Unlike the present, you would not have to wait until you file taxes, so this makes it better than any of the previous tax credits that the federal government had. More than that, it makes EVs up to $7,500 cheaper as long as the filer qualifies for the income requirements. What are your thoughts on Tesla stock price today? Let us know what you think by leaving a comment in the comment section below. Also, make sure to hit the like and subscribe button for more Tesla stock content. If this Inflation Reduction Act of 2022 indeed pushes through, it may well possibly create a big demand for EVs. Then again, parts of the bill are bound to be changed as it passes along different government offices. Of course, it may be scratched altogether if the future leader wishes to do so. Now, how will the new EV tax credit affect Tesla if passed? A fact known to all enthusiasts of the leading EV company is the production issues as a result of supply chain issues brought about by the COVID-19 pandemic that swept the globe. It is no secret that Tesla has not been delivering according to its target number. However, things will change if this bill is passed, as it would generate new demand and may well possibly lead to price increases. If and when that happens, the wait times for Tesla cars wouldn't be ridiculous. Furthermore, it could encourage Tesla to pull up factory growth plans in the US and release new models sooner in the long term. While Tesla does not necessarily need the new EV tax credit to continue its 50% year-over-year growth plans, it could likely increase demand for all EVs, including Tesla vehicles. For Tesla particularly, it would increase their prices for their cars and increase gross margins as well as increasing operating profits. That said, this new EV tax credit, if passed, will bring positive changes to the company. Any and all good news for Tesla is equivalent to good news for the company's stocks. This means that the positive effect brought about by the bill on the company will be reflected in the stocks, and this is bound to make investors happy. In fact, according to Chamath Palihapitiya, a Sri Lankan-born Canadian and American venture capitalist and CEO of Social Capital, Tesla stock has a bright future and will be worth double and even quadruple in the years to come. He said, "This is in line with Tesla's current standing in the stock market." Moreover, due to an interview with CNBC's Kelly Evans, Palihapitiya stated that Tesla's incorporated trade idea, which is the 5-year convertible bond that allows 95% of the potential upside of equities while having the negative risk of a bond. According to him, he sees this as a call option for one of the world's most successful businessmen. He added that when he started buying the said convertible bond, it yielded 5.5% and further stated that he is willing to bet on Elon Musk, Tesla CEO, as he considers him a friend. However, evidence shows that Palihapitiya is a solid investor and is not the type to place a bet just because of a close friend. This can be interpreted as him trusting the potential of Tesla stocks rather than just his friend Musk. Palihapitiya, along with other experienced and established financial experts, believe in the Tesla brand's value as well as its potential to surpass expectations. In fact, they believe that Tesla is well on its way to proving just that. Being the market leader in the production of electric vehicles, Tesla remains to be the leading EV company, although its countless competitors are on their way to following its path. Visit Tesla stock and watch our other videos for more of this content.